market is starting to turn around. I'm about to buy probably my entire portfolio worth of stocks today. Everything that I've been looking for months has finally set up. We're going to cover that and more on today's Ask Me Anything Friday. But the first question is, the Outlier code is not working for the Trader event. So what the smart trader is asking about is on May 7th and 8th, I will be speaking at the Trader event in West Palm Beach, Florida at the PGA Hotel and Conference Center there. The issue is that you Outliers are so awesome. We have maxed out our free tickets. So I just sent another email 4 minutes ago to Lex at Trader saying, hey, can we please get more free tickets for our Outliers? It is a $79 conference fee to go if you have to pay for it. But I'm really trying my very best to get you more free tickets because I want to see you all there. I want to max out the whole conference and it just be a Trader and Outlier conference. That would be so sick. Oh my gosh, would that be so sick? So if you want to register, linked down below is the link for the registration. And again, the code OVTLYR, OVTLYR, will hopefully get you more free tickets. But if it doesn't, that's because our Outliers are so awesome and we have completely maxed them out. Stacy says, in the screener, by the way, Stacy is so cool. Stacy actually sent me my new avatar picture on Discord. Let me share this real quick. Go to Discord. All right, so my avatar picture. Let's see if I can find myself real quick. This random guy. Yeah, Stacy sent me that picture. I thought it was super fun, and it looks like Stacy has her own little avatar right there. I love it. All right, Stacy asks, the screener has relative greed greater than 1 and less than 1. A sector can have more fear and greed than the market, but be less than 1. Does relative greed mean fear and greed like relative volume does the volume? So the way that relative greed works, and this is one of the things that we found in our back testing, and here's a great thing about what we do at Outlier. There is no trust me, bro. There is, hey, I found this secret stock that has a potential to 3x in the next 3 weeks or whatever bullcrap the other YouTubers do. What we actually do is we take the data, we run our statistical analysis on it, and we come up with all the back testing to support where the signals are coming from, why the signals are so good, et cetera, et cetera. We are not every other YouTube channel. And that is why we're competing in the US Investing Championship this year. And by the way, a ton of our Outliers are competing in the US Investing Championship this year. And I'm so proud of you guys because every single one that is on the board right now is beating me. How cool is that? How cool is that? I'm so proud of you guys. All right, but where I want to go with that is sector relative greed. What this is measuring the sector's greed versus the market greed. And when we were back testing this, we found that this was one of the most important things that drives the sector and the stock higher is if the sector is really greedy. Now, where did the concept of that came from? So that was one of my concepts that I put together from this book right here. Now, this book is ancient. This literally was about a trader in the 1950s. It's called How I Made $2 Million in the Stock Market by Nicholas Darvis, updated by my friend Steve Burns. You can see Steve right there. Steve's one of my best mentors I ever had, and I'm so grateful for Steve. But what he would do is he would buy every stock in a sector that was popping off. And then when the stocks stopped popping off, he would start taking them out, right? So imagine if you bought a sector, maybe there's 15 stocks in a sector, industry, whatever, right? And you're going to buy all of them that are at least showing strength. And then as they start getting weaker and weaker, you start picking them off. But these are the best stocks in the best sector, and those guys can run like crazy, right? So what we're trying to do here is mimic that with sector greed being greater than market greed. So how do we measure sector greed and market greed? First, you pop into Outlier and you go over to the breadth tab. Couple new buttons on breadth tab as of today, by the way. First button that I noticed was the time frame, which thank you very much, Mahesh, our CEO. That makes life a lot easier. I like that, especially on mobile. This worked a lot better on mobile when I checked it out this morning. So relative greed and sector greed. Let's look at that on the summary page. So the S&P 500, the SPY, has a fear and greed score of 41.19. If you want to see details, you can just pop this down and then you can look at the details. Okay. So you can see the fear and greed of the SPY is pushing up right here. Now, relative greed means what is the fear and greed score, the heat map score, the fear and greed heat map, that's how they work, compared to the market. And all of these, every single one, has a higher fear and greed score than the market, which is exactly what we want to see. Honestly, I don't know if I've seen all of them be greater than the market. What we're experiencing right now is called a breadth thrust. What is a breadth thrust? That means everybody's moving. This is exactly, now granted, I can't tell you what's going to happen in the future. I cannot do that. But what I can tell you right now is this is the exact type of market environment that you want to be getting aggressive with. Again, I cannot tell you if you're going to win trades. And in fact, you're probably going to lose trades. But that's how the market goes, right? Winning is a natural consequence of trading, and so is losing is a natural consequence of trading. Even the best laid plans need to account. You need to plan on the plan, not going to plan. Okay. So every single one of these has higher relative greed than the market. So to Stacy's question here, a sector can have more fear and greed than the market, but be under one. I think that is actually not correct, right? If it's greater than the market here, it should be, so 41.19, all of these are greater than that. And if it weren't, it would be under that. Does relative greed mean the fear and greed like relative volume does to volume? That's what we're measuring here. The fear and greed heat map of the sector versus the fear and greed heat map for the market. Great question, Stacy. Thank you so much for that. And thanks so much for the avatar. Old Day Trader says, by the O'Neill Minervini definitions, I think we got a follow through day. Would you put any stock in this relative to the outlier signals? So here's the thing. That is something you can 100% use in your trading plan. It's not something that I use, and that's okay. What I did see is exactly a few things. First, we have the 10 over the 20, price over the 50. This is confirmed as of yesterday. So today, we're now totally changing things up, right? It is confirmed as of yesterday. If you want to look for support, right? You saw some support right here over and over and over. Support can turn into, or resistance can turn into support. Support can turn into resistance. And so this could absolutely turn into more support down here now that we're over it. I'm not saying it will. Don't misconstrue this. I am not the YouTube guru who claims to know what the future is. I'm saying this could be helpful. Okay. So we have 10 over 20, price over 50. We've moved up into a new area. There is an order block up here. However, we've got room. How much room do we have? About 1.6%. Granted, that's not a lot, but remember, this is on the market. We're going to be looking for individual stocks today, which is a totally different plan. And then let's go over to market breadth. We can see more buy signals pushing through, which is exactly what we want to see. So the green line represents how many buy signals versus sell signals on a percentage term. We're up at 43.36% on buy signals. And the red line right there is the 10 EMA of that. And we're seeing more uptrends and less downtrends across the whole market. Then let's break that down even further. Every single sector except energy also has bullish breadth. And it looks like all of them are with this outlier score of 2, and the outlier channel score of 2 means it has more uptrends, less downtrends. Materials has just 1, and technology has just 1. So let's just take a look at that real quick. So this is technology. And what do I mean by 1? Let's go to the 3-month view. Man, I like that. It has more uptrends today, same number of downtrends. So isn't this exciting? I'm very excited. That's that. Now, granted, none of this is follow through day because everybody needs to come up with their own plan, right? Their own plan that they can implement, that they can follow consistently and with discipline. For plan ETF, does it make sense to add a stop loss at the wick of the gap up candle in case of a gap and crap situation? Actually, you know what? Going back to the chart, that's one thing I forgot to mention. We are looking at a gap and go right now. Now, granted, gap and go requires at least 3 candles. We're at 2 candles so far. Gap and go means that the gap candle right here gaps up. You put a line at the bottom of that. Let's change the color of that line real quick. Let's make this line purple. There you go. Purple is my absolute least favorite color. So there you go. So we got a gap up right there, and it's starting to go. A gap and go looks like this. Okay. A gap and crap looks like this, where it gaps up and then it pulls back down. Can I show you a couple examples? Is that okay? If that's okay, if you guys want to see a couple examples, do me a favor, do a little engagement bait here. Do me a favor, put a thumbs up in the chat if you want to see a couple examples. Now, also, our examples are listed in the trading plan that is linked down below. And if it's not there, if I didn't update this in the link down below, trust me, it will be updated within 30 minutes of this video closing today. So a gap is defined as the difference between one candle's close price and the next candle's open price. For our plan, we're only concerned with gap ups and then craps back down. A gap and crap is at least a 2-day pattern, generally a 3-day pattern, a 5% up move from the gap. So this is on the market, right? This is on the SPY. So for me personally, hang on real quick. If you are going to put a line at the bottom of that wick right there, just keep in mind that this would not constitute a gap and crap or gap and go according to Plan M rules, because this wasn't a 5% gap. This was from the close to the open, a 2.5% gap. Now, granted, it's the market. It acts different. We all know that the market acts different, right? It's an amalgamation of 500 stocks. It's 483 stocks, you stupid guy. I don't care how many stocks it is. It's 500 stocks. Okay. Put a line at the bottom of the gap up wick, and if the price closes below that point within 3 candles, then close the trade. If not, follow the exit signal. So for us and for Plan ETF, that's not part of our exit strategy. Okay. And that's okay, because you have to come up with your own plan. And if you want to add that to your own plan, you 100% absolutely can. I'm going to tell you that right now. It's not part of the outlier plan, but it can be for you. Can be for you. Okay. So this is Plan ETF right here, but we're focusing in on Plan M today. We're going to be getting busy on Plan M today. I'm very excited about that. Now, let me show you examples. I saw lots of thumbs up come through. So, of course, how about I do that for you? Some gap ups and gap and goes versus gap and craps. How about Palantir and Meta in February? Gap up, crapped back down, right? That was the low of the gap candle right here, and you can see it crap back down. That is an exit signal. Now, granted, this was in a downtrend already, but the point here is that this was a gap up with a crap back down. This is Meta right here in an uptrend. It gapped up, and then within 3 candles, it had crapped back down. That is the exit signal right there, a close under the low of the gap candle. Does everybody understand? Throw another thumbs up in the chat. Throw another thumbs up in the chat if you can see what we're talking about right here. Now, what does a gap and go look like? Throw a thumbs up in the chat if you can see the gap and crap. What does a gap and go look like? A gap and go looks like this on AT&T in January. It gapped up. Now, this particular gap was only 3.5%. So give me a little leeway here. I'm trying to show you examples. It gapped up, put a line at the low of the gap candle. Watch it pull up a little bit, maybe pull back slightly, but it did not cross that line right there. It did not come back to the point where it crapped back down. It gapped up, pull back a little bit, and then rocket shipped higher, right? That is what a gap and go looks like. So as of right now, we are sitting in a gap and go type of formation on the market. Does that mean it will continue? I don't know. I am not the YouTuber who claims to know the future. I am the YouTuber who actually trades and actually makes money and actually is competing in the US Investing Championship with actually verified results. So I don't know what's going to happen. All I can do is look at what I see right here. So with that being said, if this makes sense to you, you understand a gap and go and a gap and crap. Now it's time to put a fire emoji in the chat. If this made sense, put a fire emoji in the chat, because that's what I want to do. Is I want to help you out as best as possible. Let's keep going. Would you please go over your process for selecting the greediest of the greedy? So in a nutshell, the way that my trading plan works, Plan M works, is we're looking for the greediest stock and the greediest sector when the market's getting more greedy. So let's break that down. How do we get to that point, right? That is what is linked down below, 100% for free. There is no obligation. There is no paywall. There's no masterclass. There's no BS. You click it, you got it. Okay. So first, it's this right here. I'm not going to go through all these steps right now, but what I am going to tell you is that we're looking for stocks that are just like blowing up, right? That's the whole point. Stocks that are just blowing up out of the water. Now, I'm going to tease this and say, if you want to see what stocks I actually put on today, you need to subscribe to OVTLYR so you'll be part of the invitation-only live stream that'll happen this afternoon where I start buying those stocks. And you're like, oh, but it's 82 cents a day. And listen, if you don't want to be there, that's fine. The replay will be out on Monday. So by all means, just be a tightwad. Don't get OVTLYR for 82 cents a day and just see what I pick on Monday. How's that sound? Sound good? All right, cool. But either way, Mr. Bohemian, he does have his what happened to your old username? It was like OVTLYR McDuck. I really liked that one better. Point is this is what we're looking for. And Mr. Bobohemian, I know you're going to stick around so you can see me pick those stocks here in just a couple minutes. Thomas says, if a stock has low volume, that is all the nine of nine, versus a stock with high volume, that's all the 9 of 9. Does the volume have anything to do with my trade? So this is a fantastic question, a really fantastic question, because at some point in time, you're going to run your screener in Outlier and you're going to say, wow, there are so many stocks to choose from today. Holy goodness, where do I even start? Where do I even start? I start with the highest backtest and work my way down. Highest backtest and work my way down. Now, where does the volume fall? I don't know. Doesn't matter to me. 30-day average volume is here. But in my filter, I want at least 1 million shares average daily volume. Can you go less than that? For sure. But for me, that's the only criteria for volume that I'm looking for. That's the only criteria that I'm looking for. Sean, what's going on? With the new filter options, can you go through your screener settings again? Absolutely, Sean. Here's the thing. In the sake of brevity for this video here, what I would appreciate you doing is taking your phone, turning it sideways, hitting the lock button and the volume up button. That way you've got the screenshot so you can always reference this. But I'll blow through this real quick. Ready? Sector and index. I'm going to go with all the sectors except for healthcare. Screw that guy. That are bullish on breadth. And we already saw that energy's not. So I'm going to take that off. Industries wide open. Outlier signal return positive, right? We only want to see the stocks that have a positive outlier return. Capital efficiency. This is measuring the returns on a per day basis compared to the returns on a per day basis versus buy and hold. So for example, AEP, if you follow the outlier buy and sell signals, it was 4.2x. So let's take a look at that real quick. 4.2x what buy and hold would have done. Now, what do you mean by this, Chris? So let's look at the math behind it here. And what we see here is from 2020 to today, outlier return was 71% and buy and hold was 52%. Well, that's not that great. It's only 71. It's only 20 percentage points higher. Shut up, right? Understand what the point of capital efficiency means. You ready? It had 36 buy signals during this time. The average holding period was 14 days, but you were only in the market 32% of the time. Meaning 68% of the time, you're doing anything else you want. You could be sitting in interest-bearing cash. You could be investing in anything else. It doesn't matter. And because of that, you're only in it 1/3 of the time. The capital efficiency means that you are actually 4 times more efficient on a per day basis to compute how much your returns would be versus buy and hold over the same time period. Capital efficiency is a really, really cool metric. But I will put this out there. You absolutely can filter on it. It's just not something that I filter for personally because I'm looking for outlier signal return. Because right here, I know that I still have a positive edge, which is what I'm looking for. Even though capital efficiency is not as high as others, it still has a positive edge, and that's where I'm looking for. Plus, also by sorting by highest return and down, you're looking at the stocks that outlier works the best on, of course. And there's some that have like a 1% outlier return. Maybe that's not worth your time to invest in, when the one right beside it is 180% return. Completely up to you. You do you, my friend. 30-day average volume over 1 million. Current buy signal status needs to be a buy. Now, some of these are going to be the same thing as down here. Like current buy signal status is the signal having a buy. Okay. Relative volume. This is new. And this is saying what is the volume today compared to the average volume of the last 3 months. Okay. Now, somebody who's looking at volume, right? I think we just talked about volume a couple of minutes ago. This may be something you want to take a look at. Signal type, we have swing and active signals. Swing signals, and you can change it right here. Swing signals are longer in duration with a higher expectancy. Active signals are shorter in duration, but they have a lower expectancy. So one is frequency and one is expectancy. You get to choose which one you're looking for. Sector relative greed, we already talked about that. Price change. Over X number of days, how much has price moved? You get to choose what this looks like. Price range. Anything over $10 is what Chris chooses. That's what we put in our back test. And the funny part about this was Chris used to be a real snob. He's a snob in general, but Chris used to be a real snob where I'd only look at stocks that were $20 and greater. Okay. Now I'm looking at $10 and greater. And the funny part about this, the really funny part about this to me was when we were doing all of our back testing, we built up Plan M. The lower price the stock, I'm not joking when I say this, the lower price the stock, the higher the expectancy got. I'm not joking. So the expectancy on lower price stocks was higher, all things being held equal, than higher price stocks. And so I was like, well, you know what? I'm leaving a lot of money off the table by having that $20 cutoff. And at $10, you're more likely to see options be available, right? You're more likely to see maybe a single digit option strike. So you might see like a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. But if you get down to like a $5 stock, you're probably not even going to have any options at all. And you're just going to be looking to trade the stock. Which of course you can do. Everything that we talk about can be done with just the stock on its own, but then you're missing out on leverage, huge leverage that is allowing you to also pull the ninja hacks of rolling. Going back over to this market cap, I leave it wide open. Fear and greed, I leave it wide open. These are things we found in the back test. You want to do fear and greed heat map, which is the same as this right here. We want to see it rising. Okay, this and this are the same thing. Overlay indicator. That is looking at a stock, and the background right there shows you if it's trending higher or if it's trending lower. Let me zoom out a little bit, see if we can find a lower trend. Lower trend is represented by red, pink backgrounds. Rising trends are represented by green backgrounds. And this is exactly the 10, 20, and 50. Okay, that's exactly what the overlays are. That's exactly what the backgrounds mean. And it's exactly what you're filtering for right here. And it is exactly the same thing as the trend. Okay, the trend on the stock. This is brand new as of today, like literally today, include partial data stocks. What does this mean? There are some stocks like APLD. Oh man, that wasn't it. Okay, there are some stocks that we have inside of OVTLYR. I thought APLD was one of them. We have inside of OVTLYR, but we don't have enough data to generate the fear and greed heat map or the buy and sell signals yet. Now you can include that here if you want. It'll go through everything with the exception of the fear and greed heat map and the buy and sell signals. But for me, if it's not there, then I'm not interested in looking, but you can do it. All right, that's what I'm trying to get at here. And then we have news coverage activity, unusual news activity, and top mentions today. Unusual news activity on AEM going on right now. Let's take a look at it real quick. You can come down here on the right-hand side and go to sentiment. And you can see for this stock, it's got a little bit of unusual news activity. And you know what? I don't know what it is. What is it? It eclipses the 50-day simple moving average. What should investors do now? Why this stock outpaced the stock market today? Whatever, right? I'm not a news-based trader, but that may be something you want to look at. Totally up to you. So that's why I'm not including it. So this is exactly my screener settings. Be sure to take a screenshot of this because this is precisely exactly what I'm going to be using today. Leo, what's going on, Leo? Chris, being new to OVTLYR and working my way through the videos, thinking Plan M will be limited to 1%. Since I only can manage so many trades, does the remainder stay in Plan ETF, given it meets conditions? Well, that's completely up to you. Remember, I can't tell you what to do. I will never say, you got to buy this, you got to sell that. Why? Because I will always be on the wrong side, 100% of the time. If I say, buy this stock, it's going to go to the moon, what's going to happen? It's going to go down. I'm in a lose-lose situation no matter what. If I say, you got to get out of this stock, it looks terrible, it's going to go right back up. I will always be wrong because that's how the internet works. I'm only going to follow my plan. And I want you to do the same, Leo. Come up with your plan, start following that. I'm not 100% what you mean by limited to 1%. Maybe you're talking about position sizing. Honestly, I don't know your plan, but I will tell you one thing. I am most likely going to be full port today. That's just how it goes. Okay, here we go. And I knew this question was coming at some point. Does the fact that geopolitical situation is currently mixed, would you not be trading better on Monday? All right. Here's the thing. Ready? There is always a reason not to trade. See if I can find it real quick. I found the slide yesterday. I mentioned it, but I couldn't find it, so I went and I found it again. There is always a reason not to trade. There is always a reason not to trade. Come up with whatever excuse you want, but I'm going to give you a great example. Last year, when... Hang on, let's see if this is here. No, it's not. Okay. Last year, last April, or it was more like last May. I don't know if you guys remember this. The market was on its way down. Friday, May 9th. By the way, receipts are on YouTube. You can see exactly what I'm talking about. All of my trades for years are on YouTube. Receipts are on YouTube. On this Friday, what did I do? I loaded the boat. On this Tuesday, I had closed a lot of trades and my account had grown 30% in 5 calendar days. I took out enough money to pay off my wife's student loans because frickin' Joe Biden, we got the letter from him saying, we're going to pay off your student loans if you vote for me. We got the letter that said, hey, my wife's student loans are going to be paid off. And I'm like, sweet, I'm not paying on that for 4 years. So we immediately paid off her student loans, and I immediately went out and bought myself a fancy Batman watch. What happened that weekend? The tariffs. Tariffs. Oh my gosh, tariff goes away. The market didn't even slow down for months at that point. So again, there's always a reason not to trade. 100%. You, Dasby, and everybody watching right now, you get to decide if that risk is worth it to you. I'll also preface this and say 100% of all of the data, 100%, with no doubt about this whatsoever, 100% of all the data that went into this backtesting is on price. Price alone. That's it. There was no emotions. There was no worry. There was no fear from whoever could be trading it. There was no justification as to why I am or am not going to stay in the trade. It was price alone. So again, there's always a reason not to trade. But as Larry Hite taught me, Larry Hite, by the way, this guy right here, the first $1 billion hedge fund manager, one of my direct mentors, you can see me working with him on YouTube, receipts are there. If you diversify, control your risk, and go with the trend, it just has to work. What he told me was, if you have a plan and your plan sets up and you don't execute your plan, just take your plan, crumple it up, and throw it out the window, because you never had a plan to start with. So for me, I'm going to follow my plan. Like I say, there's always a reason not to invest, and I totally get it. But last year, it certainly paid off for me really well. And I can't see the future. Meg says, the greediest sectors right now are utilities and financials. Like last fall, when the utilities trades tanked. First off, it was financials and energy. You're mistaken in that case. Trust me, I was there. All the financials worked. Literally none of the energy trades worked. That is part of the game. I want to be 100% transparent with you. That was exactly what happened. But my account still grew like 13% in the span of a couple weeks. Okay. And remember, this plan has a 56.94% win rate. Does that mean all of one sector will win and all of another sector won't? I don't know. But I do know that losing is a natural consequence of trading, just like winning is a natural consequence of trading. So going back to this, it was energy and financials. All the financials worked. None of the energy did, but I ended up having more money in my bank account at the end of the trade. So I'm okay with that. That's how the plan works. Okay. Are you looking at anything extra today? I will look at everything today. But are you going to stick around and find out? I don't know. That's up to you, Meg. The real question is SoFi on a buy signal? That is the real question. It is the future of finance. Is SoFi on a buy signal? I save SoFi, so I always can keep an eye on the greatest stock. No. SoFi has been sitting on sell since December 9th. And I know the SoFi bros are dying. They are horrible right now because they're down like, let's find December 9th real quick. Here. The SoFi bros are losing their minds because since December 9th to today, they're down over 40%. And had they just followed this one itty bitty baby sell indicator right here inside of OVTLYR, which I'm guarantee you was worth way more than 82 cents a day to them, but they didn't know about it. And, you know, I can only do so much. The YouTube algorithm only puts it out so far, right? I'm pretty sure they would have saved way more than 82 cents a day for, what is this? For SoFi, right there. Yeah. So anyways, yeah, SoFi is still sitting on a sell. The sector relative selector on the screener seems to take the relative of the stock to its sector instead of the sector greed compared to the market greed. Is this correct? Sector relative selector on the sector seems to be taking the relative greed of the stock to the sector. Oh, is that true? That's not supposed to act that way. If that is the case, do me a favor. In Discord, let us know that the sector relative... and granted, this is the first I've heard of this, so I don't know if this is true or not. in Discord, tag Mahesh. Mahesh is our CEO, and he will get that fixed up right away, because sector relative greed is supposed to be comparing the sector, right, the material sector versus the market. Now, again, this is the first I've heard of this. So if that is true, do us a favor and put it inside of in the Discord. Rick, one of our Bravo students, says, would you enter a trade a week before earnings? My rule, and I want to double check this because I know it was in my old slide deck. We got a beautiful new slide deck a few months ago. Earnings. Hang on. Earnings. Earnings for this plan. Earnings are 100% avoided. It may not be listed in here, so let me go in and put this in. Earnings. Can trade. Will take. Now, this is my rule that I remember. This is why I'm adding it right now. It just didn't make it in the slide deck, and that's fine. Take trades with greater than or equal to 3 days until earnings. So if it's 3 days or less, I should say greater than 3 days. Greater than or equal to 4 days until earnings. Say like that. If it's 3 days until earnings or less, it's too close in time for me, and that's fine, right? You do you. Whatever you do you. If it's greater, it's 4 days or greater, I will trade up into earnings, because honestly, this is one of my favorite trades. This is one of my favorite trades. Here's SoFi's earnings. I remember this. By the way, receipts are on YouTube, and I said, do not buy this as it's crashing up into this order block. It fell 50% after that point, 53% precisely, if you want to know. In fact, here, if I remember that correctly, it was 53%. Yeah, 53.6%. You're welcome. Exactly. On YouTube, you can see Chris saying, do not trade this as it's crashing up in an order block. But look at this, right up into earnings. Yeah, I will absolutely trade right up into earnings, because you can make a killing trading up into earnings and then get out of the way. So thank you, Rick, for reminding me of that. Like I said, these slides will be updated in the link down below within 30 minutes of closing this video. And then you're not going to need to download anything new. You just click the link, you got it forever. Okay. Thank you, Rick. I appreciate that. Do you have a limit on the number of positions when entering Plan M? My limit is as many as I can be given. Oh my gosh. My limit is until I run out of money. That's my limit. That is my limit. That may not be the answer you're looking for, but it's the truth. Intel has been hot all week. Didn't I talk about Intel? I feel like on Tuesday, I was like, man, this is actually a really beautiful stock. Let's go look at Intel real quick. I feel like it was on Tuesday. I was like, wow, what a big, beautiful stock this is. Oh my. Yeah, receipts are on YouTube. Chris was saying, man, if Plan M was set up, I would have absolutely bought Intel. Look at that. Now it crusted over this order block right here, which is exactly what you want to see. Buyers overwhelm the sellers. And here's the deal, right? This is a perfect example of what I want to show you with order blocks. Hang tight. Okay, order blocks. If the stock has an order block and moves in the direction of the trend, but it hits into the order block, I want to close at the end of the day, or on a 5-minute chart, wait for the 1020 to cross, right? What happened here? It had an order block, right? It ran up into it. It opened in this order block, and it ran all day long, and it closed on top of it, which means the order block is dead, which means buyers overwhelm the sellers. That's what this rule is there to do. If it closes on top of the order block, you just got all the support, all of these buyers behind you. However, if it got rejected at that order block, let's see if we can find one. It got rejected at this order block right here. It didn't quite get into it, but it did get rejected at it. That's what we're trying to avoid. This is a perfect setup right here, which is receipts are on YouTube. I talked about it on Tuesday. Intel has been hot all week. Would this still be one that you'd be looking to trade on today? Well, let's take a look at that. Okay, so the outlier buy signal came when? Outlier buy signal came on April 6th. April 6th was right here. All right. Now, April 6th is, how many days away is it from today? Let's do this. It measures. I'm looking for 5 calendar days. This is 4 calendar days. So here's the thing. If this passes through my screeners, it's going to happen. Okay. You have to tune in to find out. If Plan ETF is in play, would you take the index with the larger distance to an order block? Okay, great question. Now, Plan ETF has an issue right now. Anybody know what that issue is? I think Justin was on it. the issue here is that while it is an uptrend, as of yesterday, it's confirmed, while it does have a buy signal, while the heat map is under 70, while it is within the value zone, let's pull up the value zone real quick. Yep, still within the value zone. This order block right here is within 1.67 or 1.46, which means I'm not going to get into playing ETF because it needs to be at least 2% away, and this is definitely more than 30 calendar days old. So I won't be taking any playing ETF today. Can you show how to set the outlier screener? I showed that earlier. But I mean, it's as easy as drop downs right there. And then again, this is not unfortunately a shareable property yet. When it is, trust me, you can share it all over the place. Can you show to access the 2026 portfolio manager? Here's how you do it. You ready? You go down to the description of every video in 2026. You find the Google Sheets one. You click it. It's exactly this file. Exactly 100% this file. Okay. Now, these are my exact returns that are in the US Investing Championship. We're within a couple bucks. I just verified yesterday. We're within like, I think $100 or so on the bookkeeping over here. You know, we've got monthly $10 trade year fees, and then every trade that we make has some exchange fees that go along with it. So within $100 makes total sense to me. So this is pretty much in balance. But yeah, you click it down below and then you got it. Now there's a couple tabs right here, web view, a web view full portfolio. That's because we actually have this on the OVTLYR website. If you go to OVTLYR.com and you go to live trades page, you're going to see this file right there. Isn't that cool? Isn't that cool? Yeah. So this will always be updated down there. Now go to start here, learn how OVTLYR works. You can start adding in your position sizing over here, your main portfolio over here. Now, the screener download, that's a secret. That's a secret. You're going to have to tune in to this afternoon to see how that works. Hey, you like the teasers? You like the teasers? I'm trying here. When filtering opportunities, how much do you factor closeness of earnings days? Oh, we talked about that already. So within, if it's 4 days or greater, I'm good. If it's 3 days or less, I'm not interested. Mike, what's up, dude? Can you go over how the 4 digits of open interest on the options chain affect your stock choice? Yes. Okay, great question, Mike. I really appreciate it. Mike is a Alpha University graduate. Good to see you, Mike. All right, so this is a recent change we made. In Bravo class, we had Lex, who's one of the bigwigs at Tradier, come on. And Lex actually created the Tradier Pro platform, which used to be called like TradeHawk or something, and then he sold it to Tradier. So Lex is like the guy to learn from. I would highly encourage you to go watch this video with Lex. I know the Tradier thing's in the way. I would highly encourage you to go watch this video because I learned, I've been trading for 17 years and I learned a ton in this video. One of the things we talked about was I had previously been looking for option contracts with at least 250 open interest. Lex was like, that's fine. Honestly, the market makers can absorb anything you throw at them. So you don't have to be that, right? He's like, listen, if you throw 10,000 contracts at them and they have 250 open interest, they'll fill you. No problem. It's going to cost you, but they'll fill you. So the way that Lex encouraged us is he said, and again, do go watch this video. How do you get to it? You go to the playlist page, and then you go to the OVTLYR University Bravo, and then you go watch this video with Lex. This one has like twice the views of everything else because it is that good. Trust me, you do want to watch this video. He said specifically, you want to find stocks that have a decent amount, and decent, we're going to start with 200. So this is my rule. Lex said triple digits. He said triple digits. So that means basically anything over 100. I'm going to play a little bit easier and say 200 at the chosen strike. Okay, so what does that look like? Not this one, right? Not this one. Let's go to something that's more liquid. SoFi is more liquid. Greatest stock in the history of mankind. SoFi, bro, for life, right? You want to start at a strike that has at least 200 open interest. So here, right, that's 318 open interest. But the next step is you want to have 200 plus all the way down to at the money. So we wouldn't want to take this strike here because the next strike doesn't have the open interest. However, we could go for this strike here at 943 because all the way down to at the money, 943, 376, 2,000, 8,000. This is exactly what we're looking for, Mike. Does that make sense? That makes sense to you guys? If it does make sense, do me a favor, put a thumbs up in the chat because I want to make sure that that you guys do understand what I'm looking for on here. Now, this is also Charlotte's rule. And Charlotte was one of our Bravo class members. And this is something she said that she did. And when she explained, yeah, put a thumbs up in the chat like Brian, if this makes sense. If it doesn't make sense, actually do me a favor. If it doesn't make sense, put a question mark emoji in the chat because I don't mind taking another extra minute to explain it. If it doesn't make sense, throw a question mark. If it does make sense, throw a thumbs up. Okay. Charlotte had this brilliant idea, which was if we're going to roll these trades, we probably want to make sure that not only the strike that we're on has liquidity, but the strikes we're going to roll to have liquidity. And lo and behold, Charlotte's rule, her idea, perfectly aligned with what Lex was saying, which is take it where it's got triple digit at least all the way down. And I was like, this is something we have to implement right away. This makes absolute perfect sense. So Charlotte's rule is 200 open interest all the way down with at least 200 to start with on your strike. So that makes sense. Now, another change that we did, and thanks to Cam, I don't know if Cam's here watching, but Cam is a rock star. Let's put in Cam. I'm doing so much engagement bait today. I appreciate you guys playing along. Cam, let's put respects to Cam because Cam helped me out with this, right? I recognize Cam was a smart guy, and I love smart people. Like literally, I love smart people. And we did a little project together, somewhat like back testing we did with Scott. And what we found was that I needed to go longer on my options. So now the rule is monthly contracts only because of the liquidity, and then monthly contracts only at least 30 days until expiration because, right, if our average trade duration is 17.46 days, that's roughly half of the duration of the option. Okay. Now, all options decay over time. But the difference here, right, we're talking about, don't even worry about the out of the monies. Okay. What we're talking about here is I was getting 21 days to expiration options with 17 days being our average trading period, meaning I was using up 80% of the extrinsic value, and you can't get around extrinsic value. However, if we go to 30 days, we're using up roughly 50% of the extrinsic value. So, yeah, there you go. You know what I really like to do? I like to give credit to the people who help me out, right? I am just a random guy on the internet, right? The Charlex rule. I like it. I like to give credit where it's due, right? I'm just a random guy on the internet. There have been so many people who have blessed me in my life, and I hope that I bless you in your life. But I'm not going to take credit for the fact that Cam did the work. I'm not going to take credit for the fact that Charlotte came up with this amazing idea. I'm not going to take credit for the fact that I figured out the options chain that I didn't. Lex showed that to me, right? And so the all the way down looks like this. So go into whatever platform you're using, make sure you enable open interest. Now, I don't like volume. I don't like volume because I don't think it matters all that much. That's the number of contracts that have traded. Open interest is the number of contracts that people want to trade. These are people who have orders right now that are sitting in the market ready to go. Okay. So that first off is what we're looking at here. Then at the strike that we choose, okay. Now, granted, there's other things that go into this, but at the strike that we choose, it needs to have at least 200 on the open interest, at least 200. And then it needs to have at least that much all the way down. That way, when we do roll, we can go from A to B to C to D. Okay. That's it. That's it. I got time for a couple more questions. Let's see how many I can get through real quick. I'm gonna try and speed run these, right? Can you please explain how to ninja roll when rolling options? I got you. First off, ninja rolling is the coolest hack of all time. So imagine that you had bought the 13 strike in SoFi. And then SoFi's running. SoFi's actually working. And these slides are these big circles in the deck. Okay. At the first half ATR goes in your direction. So you have to go on the chart and you have to measure out how far the half ATR is. Right. So let's go to SoFi. And I have some templates, which makes life easier. And I'm going to pull that on right now. OVTLYR value. No. Deep thought. I'm going to turn on current plan markup. That makes life easier. Now you like that. Deep thought is the best. All right. So I'll go in and this is automatically there for you. And I will add my templates. So a half ATR roll right here. Now, granted, this isn't a downtrend. Do not do this. I'm just using SoFi as an example. And then I'll put another one here. And I'll put another one here. And I'll put opening where I got in here. And then I'll put my 2 ATR stop down here. And then I'll put my 3 ATR emergency exit down here. Now, I've marked up my chart. So I can now turn off the trading plan markup. And it will stick. If you leave that, it adjusts with price. Okay, so there we go. Now, looking at this, right? If the stock moves 1 ATR in your direction. Now, I have pulled this back to half ATR to start. Why? The reason that I did is because even the losing trades move up at some point in their life cycle at least 0.6 on average ATR. What does that mean? Even the losing trades work a little bit. Okay. Now, does that mean it will every time? No, this is an average. Let's say that it does move up to here. That's where I'm going to take my first roll if I can. If the liquidity is there, if the extrinsic value is there, that's where I will sell to close the original and then buy to. So it's going to look like this. You'll click on the bid to sell to close the original, and then you'll click on the ask to buy the new one. Okay. So this is in one order. Can you roll up for a credit? So for this one here, it shows a credit of 82 cents. Perfect. Can you roll up for a credit? If yes, as one order, sell to close the original, buy to open closer to the money with the same number of contracts and same liquidity standards. Now, the question is how close? Totally up to you. 100% up to you. You could go from here to here. I don't care what you do. But I'll tell you one thing. If you're using the same liquidity standards, you're going to find that breaking point. You're going to say, oh, wait a minute. I can't roll to the 66 delta. I'm going to have to stay at the 75 delta. So move from A to B. Now, of course, Danny, there's way more that goes into this. And of course, subscribe to the channel so you can follow along. And Joe has done an incredible amount of work on the Outlier Training with Joe channel, specifically on this. So I definitely recommend checking that out. Okay, I got to speed run these. I didn't speed run that question. If there's an order block on SPY, should we focus only on stock order blocks and ignore the market block? Yep, that's what I'm doing. Exactly. When you open multiple positions at the same time, given a risk tolerance of 5%, first off, if you have not, listen to me, listen loud and clear, okay? If you are not already trading at 5%, do not start trading at 5%. I'm telling you right now, Mike can attest to this. Mike, one of our Outlier Alpha graduates, was trading great at 1%. He pushed up to 5%, and on one single trade, he wiped out all of the gains. Now, granted, he did nothing wrong. It just happened to be a loser because that's how things go. All of the gains from all of his 1% trades were wiped out with one 5% trade. So look at me in the eyes. If you're not trading 5%, do not trade 5%. You've got to work yourself up to this. I've been doing this for 17 years. And I did the back test. I had the Kelly criterion results that said my ideal position size with quarter Kelly is 6%, which is what I'm running. Don't even think about it. Okay. But to answer the question, given a risk tolerance of 5%, do you have limits for the number of open positions? No. I will take as many as I possibly can that I can pay for. I'm a big IBD relative strength guy. Do you ever look at the relative strength rating for the stock? No, but I'm looking at all this other stuff. And dude, here's the thing. You can 100% add that as part of your trading plan. 100% put that in your trading plan. I 100% encourage you to do so, because if you're a big guy, I mean, you're a big guy, right? I believe you're a big guy. If you're a big relative strength guy, by all means, do it. That actually was a part of my plan. I had a calculation which compare, and relative strength is not that hard. It's what is the average range of the, what is the average up move versus average down move of the, because I calculated this, the average up move versus the average down move of the stock. What is the average up move versus the average down move of the market? And you divide one by the other. That's the calculation right there. Do you have to do it? No. It is in his plan. Outstanding. You better not super chat me. Don't ever send me super chats. I don't want it. You keep your money. Go invest the money. Don't send me that. Had enough too. Sorry if this question's already been answered. I'm a little delayed. Is there a date for the Outlier get together? May 7th and 8th. The link is down below. I don't have any official plans as far as like what we're going to do when we're there. But yeah, 7th and 8th. I'll be there. Will you be there? Manny says, Chris, I set my filters accordingly. Shouldn't Outlier 9 boxes be activated with a check mark? Yeah. Yeah, just click it. Like that. There you go. Swingnut, you mentioned yesterday that you like Deep Thoughts order blocks better than Outliers. Could the differences be incorporated in Outlier? So here's the thing. We did use similar codes, but there's a little bit of different data. This is a weird thing, okay? Where TradingView gets their data from, I don't know. Where we get our data from, I don't know either. Mahesh knows that. But there are little differences here and there in the data. And that data drives the differences in the order blocks. Now, granted, a lot of the time they fall in line, but there are times where the order blocks in TradingView don't match the order blocks in Outlier. And you can have both, by all means. I personally like the TradingView ones better. And in theory, they should be the same. But because of the data differences that come between the two, it can sometimes be different. What's the max amount of trades you put on at one time? Generally, anytime you get over 8, it becomes cumbersome. Cumbersome meaning it takes a lot of time, a lot of effort, a lot of energy, and it's difficult. But I will continue to buy as many as I possibly can. I will buy with both hands until my hands bleed, until I run out of money. And I will hold those with the most paper hands you've ever seen until I have a reason to get out. Like with earnings, that would be a reason to get out for me. I will not carry anything through earnings. In fact, I have a slide specifically for this that says, leading in earnings, close before earnings. That is my exit rule with earnings. Will you be looking at solar stocks today? I don't know. But Shane, what are you doing here? I don't know, Shane. If it pops up, dude, if it pops up, can you sort the signal start date on screener and then sort the outlier signal return without adjusting the date column? So right now, the way the screener works is it's a one type thing. You could sort by high to low on signal return, but you can't like then second sort by outlier signal date. Because you'll see here, they get like April 2nd, 9th, 9th, 8th, 9th, 6th, 9th, 2nd. But you could sort, but you just have to pick one. You just have to pick one, unfortunately, right now. Rob, is there a way to filter signal returns higher? Yeah, there you go. While keeping the entry dates from the current to oldest? No, unfortunately, it works in one way, right? But yeah, there you go. Plan ETF on TQ, more than 2% away? By all means, if that's going to work for you, do it. If that's going to work for you, I'm not going to tell you to do it. I will not tell you to do it. In fact, I will tell you, don't even listen to a random guy. I have no idea what I'm literally a random guy on the internet. Don't listen to anything that I say. How dare you? There you go. Same question. You showed you would take a trade greater than or equal to 4 days to earnings, but for something you already have, no, I will always sell it at earnings. Period. Full stop. I will always sell it before earnings. Why? It's elevated risk. I have no idea what the future is going to be. There's all kinds of trading gurus out there who will tell you, look for this to happen, and then it's going to happen, right? And then when they're right, they're like, oh, I'm such a genius. And if they're wrong, they delete the video. They're full of baloney. Okay. And because we don't know what's going to happen, that's additional risk I'm not willing to take. So I won't do it. Mr. B, you always trade at the end of the day, right before it closes. If today craps before the close, would you still trade? Well, that's a great question. That is an outstanding question. And this is one of the reasons why I wait till the end of the day. I have no idea what's going to happen here. But if the SPY, now this is an if the SPY craps, like he's saying, and goes down under the 50 EMA, we no longer have a bullish uptrend. We now have a sideways trend. And I don't know if that's going to happen. So this is another reason why I'm waiting for the end of the day. Why do we roll instead of closing and reopening? I mean, by rolling, I don't know why you'd close and then reopen. But by rolling, you take your partial profits now. It frees up capital now that you can trade with, and it keeps the trade alive. It is the greatest ninja hack of all time. Again, you could do Qs. I don't know. Manny says, Chris, I fill out the screener exactly like yours. Why doesn't my check marks on Outlier 9 become active? Meaning, why are they not checked blue? I don't know. I guess that's a support question. I literally don't have the answer to that, right? I only know. So I'm literally the dancing monkey for Outlier. I don't know how it works in the background. Mike says, how are your lines already labeled in TradingView when you add them? Oh, that's a great question. I set them as templates. So stop. Hang on. Stop. Okay. So to Mike's point, I have some favorited items down here. Now, granted, TradingView continues to impress me with all the cool stuff you can do. This is one of the cool things that I found you can do. is over on the right-hand side, right? Let's say you got a horizontal line. When you add the little stars or whatever, it becomes a little favorites bar, and you can move that all around. Now, on here, when you click horizontal ray and you click it, right, it's going to then present you with some modification bars down here. You can double click into it and modify it as well. And I can say, Mike is a rock star. And then I can save it as a template. And I can say, save as Mikey Mike, the market maker. Okay. I can hit save. Now, anytime I want to add the Mikey Mike is a market maker line, I'll click the horizontal ray. I'll click this little guy right here, and it will say Mikey Mike, the market maker line, and it will have the text, the color, and the everything saved as a default. There you go. I'm glad you asked that question, Mike. I use that quite a lot. All right, 2 questions. I'm out of here. Will we have to buy popcorn at the meetup? I won't count that as a question while Stimpy Norwood. I love popcorn. Popcorn is my favorite snack. You can buy me some popcorn. How's that sound? Is there a way to export the screener to a CSV file? Not yet, but I did ask Mahesh to do that literally yesterday. So, in fact, if you stick around, don't go anywhere. And this is only for people who are watching the live stream, because if you're watching the replay, you're SOL. You're just going to have to wait. You're just going to have to wait. I'll show you how I'm doing that in just a minute. Can you reconcile the Charlotte rule with the Lexus open interest rule? I mean, that we've already done that. That's the whole point. Charlotte and Lex rule. Would you carry an option through earnings if it were 100% risk-free? No, I wouldn't. But that doesn't stop you from doing it, right? And this is what I want you to understand. I'm only talking about what I can do. As a professional investor, I have learned through many sour experiences that trading through earnings can either be amazing or it can suck real hard, real bad. I'm not willing to walk into any situation where it's so binary. Okay. Even if it's risk-free, it's up to you. But for me, I'm taking my exit signal. I'm just getting out of the way. Will you still be listing potential trades before 2 on Discord? I don't know. That's too much work. How about we just do it right now? So listen, I'm going to continue. I'm going to show my trading plan right now for those who are watching live. But if you're watching the replay, you need to subscribe. You need to watch live, and you need to pick up OVTLYR. It's only 82 cents a day, because this afternoon I will be putting on my trades, and you can watch the replay of it on Monday. And I would encourage you to do so. But if you're ready to save time, make money, start winning less risk, click one of these 2 videos, and we'll talk soon.